Welcome back to another video on my channel. In today's video, I'm going to be going over how to actually use the inversion fair value gap model correctly, because I see a lot of people using it incorrectly. It's such a generic statement, but this video is going to be massively helpful for those of you that are learning this strategy and aren't seeing success just yet. Now, I'm going to be going over the best setups compared to the worst setups and explaining why I would enter compared to why I wouldn't. You're essentially going to be in my mind as I'm entering these trades, and this is going to help you massively from seeing why I would enter and why I wouldn't. Okay, and you're just going to apply that to your own strategy, apply that to your own trading, and hopefully your win rate increases, you make a lot more money, etc. I'm just going to ask one quick favour of you. Please like the video, subscribe to my channel. I want to get to 1,000 subscribers as soon as possible so I can start making more content, better content, and a lot more frequent. Okay, so please subscribe, it takes 1 minute, and let's get straight on with the video. Now, the main purpose of this video is going to be showing you why I would enter a trade over why I wouldn't. Okay. Now, if I just pull price back to the 1 minute time frame, okay, and I'm going to find a good setup that I have actually taken before, which is here. Now, we took this one on live stream. I do live stream every single day inside of my trading Discord. The link is in the description below, completely free, as well as my Apex 80% discount code. So if you do want any funded accounts, make sure you use the code CAFX at checkout, 80% off any size evaluation. And then make sure you join my trading Discord. I took this trade inside of my live stream, and everyone in the community caught this trade. And what I do is, once I enter trades, I ask people, why did this trade work? Or why did we enter this trade? So I know that people are following along and actually understand the model. So you can see that we are quite low in the range right now, okay? So we're quite low in the range, and we're going to expect some kind of a pullback, which is what we're getting now. So overall, we are bearish. So we're going to be looking for sells. Okay, today we are clearly bearish. This was a Wednesday. So for the whole of Wednesday, we've been dropping. So we're going to continue in that trend. Okay, that's simple how I found my bias. So we haven't quite took out this level of sell side liquidity. Now, does it make sense to suddenly start pumping up from here? Do you think it makes sense, personally, to start pumping when we came 3 points away from taking a major low? Just ask yourself, does it make sense? Your straight answer should be no, okay? And that's why I've got this 1, 2, 3 checklist here. So this is what I always ask myself. Now, the context behind the trade is, if anybody is taking a long position here, it doesn't make sense for the market to pump at this point, because we haven't swept this major low. Okay, until this goes, I will not enter a trade long. I will looking to be taking this low, so I will looking for shorts. And that's just simply how I work it. Is there a major high and is there a major low, and have they been swept? And if not, then we're going to target them. And once they are swept, then we look for a reversal. And that's just how my mind works. So in this scenario right now, I am thinking, as this trade's playing out, I do not know if we're going to come up and take out this high. But I want to see that happen, okay, because it makes sense. Just the same as it would make sense if we took this high. We don't have to, but it would make sense to. So at this point now, as we're coming up, I'm looking for any clear and obvious gaps that have been formed. Straight away, it should be standing out to you right now that we have got a clear and obvious 1 minute bullish gap. Now, this is another thing that should be like bread and butter, okay? It should be there just in your brain at all times. Clear and obvious gap, clear and obvious gap. And until you can identify what a clear and obvious gap is, then you're probably not going to be profitable with the strategy. Like, that's the simplest way of putting it and the harsh reality. Like, when I see a fair layout form, I will know if that I'm going to short or long from that gap straight away. Before I've even seen if it inverses, I just know. If that breaks, I will long or short. And that's just due to screen time. Okay. An example of a bad fair value gap would be something like this. Okay. Now, straight away it should be standing out to you that this is a terrible fair value gap. Why? It's not clear, it's not obvious, and it's in the middle of just some terrible price action where it's chopping, we're chopping, there's no real direction on price. Whereas compared to mine, you see how clear and obvious that is. Okay, it stands out on the screen. You don't have to zoom in, it's just there, okay? And that's the only way I can describe it. That's just subconsciously in my brain, I noticed that gap. So now what I'm thinking is, if this breaks, I will short this gap. So if we come down and inverse with volatile candle and tap back in, we can look for a short to sweep that 15 minute major low, which I've marked out there. Now, if that doesn't happen, then of course we're going to wait for these highs to be swept. So let's just see what happens. I do not know if these are going to be swept or not. And you'll see when I play through, We do come up and we do actually take out these highs. Now, again, is there any clear and obvious gaps right now? Okay, and it's there. Now, it's the only gap in the leg, and it's, you know, it's straight after sweeping a high. So, again, I'm thinking the same thing. If we inverse this well, then this would be a good short. Now, at this point here, this is now where something just clicks in your brain that goes, okay, we're in. Now, again, I cannot teach this to you, but this will come with screen time and the more you practice the strategy. But this to me right now is instantly telling me to just get in. Okay, get in, this is a great trade. And I'll explain why. So firstly, we have swept 3 major levels of liquidity above. We haven't swept the major one, which is there, which I would have liked to have been swept. That would have made it even better. But we have swept 3 clear and obvious wicks. Okay, and the reason why that's important is because of all the people that were trading inside of this consolidation. So their stop losses are above this high or above this high. So we've swept that liquidity. The second major thing is that we have not even displaced above the candle, above the liquidity, I mean. So you'll see that not a single candle is actually closed above. We've both wicked and closed back below, which shows you it's a liquidity sweep. If we wanted to go higher, then surely the bodies would close higher. If the bodies aren't closing above, then that means we're probably going to go back down. And that's how I see liquidity sweeps. And the third major thing, which you should be noticing, is that, you know, the manner of the inverse. This isn't any old inverse, you know, that the candle hasn't just trickled through this gap like this. Okay. And then we get an inverse and we enter. You know, it's absolutely smashed through. And that's, again, alarm bells in your head. You should be thinking this is great. So here, you enter a short position, your stop loss goes a candle close back above, and you target that low that we're on about. Okay. Now, of course, we're not going to be holding all the way down to there without taking partials. I'd say you could take a partial here, which is just above a 1-to-1. So I normally like to go above a 1-to-1, and then take some partials just to ensure that if I've got a positive win rate, I'm going to be profitable in the long run. And that's just how it works, okay? If you've got a 50-50 win rate and you trade above a 1-to-1, anything above a 1-to-1, you will be profitable. So that's kind of how I work it out. I just do a 1-to-1, whenever that may be. I'll take a small partial, and then depending on how the trade is going, I may go to break even. You see, when I play through, look at that. Instantly, within 2 candles of entering, we take out our first TP. So you are now currently 20 points in profit, sorry. So we're already up 20 points, okay, which is great. That's a great trade. 20 points a day, like, that is more than enough. Now, this is where you can either go risk-free or close 50% and let the rest run. Based on how you trade it, you know, it's total personal preference. But what I would be wary of is the second point, which is, if I get it back up, my checklist, managing trade once entered. So once you're in the trade, this is another major point. So the first one is entering a good setup compared to a bad setup. I've just shown you the difference. Okay. The second major thing is managing your trade once you're actually in it. So at this point now, I'm thinking, okay, we're 20 points in profit. We've had good momentum down. You know, we entered a single bullish candle, big displacing candles, which is great. And we have got a major target, which is that 15-minute low, which hasn't been swept. But also, you've got to think on the flip side. So don't only look at the positives of your trade, that the fact it's, you know, volatile, we've got a clear target. You've got to look at, is there any road bumps / obstacles in the way of getting to that low? So, is there anything in the way that can stop price from doing this? And straight away, you should be noticing this gap that I've already marked out from earlier. So, if there's going to be one place where we start rejecting from, you would think it's going to be this gap. Okay, we all agree on that. Now, when we tap in, you'll see what happens. So, instantly, we tap into the gap, and we do actually get a bounce off. Okay, we do get a bounce off. Of course, you can't see the candle in play because it's replay mode, but I remember this trade. The second we tapped in, it actually bounced back up and started to look bullish. Of course, we got the close there, which is great. But this is where you've got to be managing your trade. So if we then start seeing bullish momentum, that's when you've got to be thinking, okay, this is where we may reverse and hit a break even. So at that point, again, you can either close another partial or close the trade fully and look for a re-entry. And you'll see what happens. So at this point now, Do you think we're going to hit break even? I think we will. Okay, and in the trade, I thought we would. So I actually closed the rest of my trade here. Okay, so I closed the trade. I took 20 points on partials, and then I took around 10 points as well. So I took about 30 points profit from this trade because I expected to hit our break even. Now, of course, you don't have to close the trade fully. You can just wait for it to hit your break even. Sorry, or you can close early like I did and look for a re-entry. Now, you might be thinking, well, how are we going to re-enter this trade when there's no clear and obvious gaps? Well, the clear and obvious gap is the one that we've just bounced off from. Okay, that's where you can re-enter. Because we do not know if this is going to break. Okay, like, it's in hindsight. Okay, we're on replay mode. We know that it does break eventually, but you don't know that in real time. You do not know at all if this is going to form a higher high right now. You've got no idea. Okay, and you'd be an idiot to say that you do. So this is where you've got to manage trade and, you know, actually understand, does it make sense to continue this trade or close? And when I play through, you'll see the next candle actually gives us more bearish momentum, which is great. Now, does this trade make sense? So firstly, we have got a bearish gap, which we are respecting. And secondly, we have formed a 1 minute BPR. So this is where you could either enter again, if you want to be a bit more risky and use the BPR as a stop loss, which wouldn't be a bad trade, or you can play it safe and wait for the clear and obvious gap to break, which is what I personally did. And you'll see, there we go. So here, the clear and obvious gap broke. So this is where I actually re-entered. You could have entered there, don't get me wrong, which would have been a good entry, but I wanted to wait just to make sure that we aren't going to bounce from this gap again. So your stop loss goes a candle close above, and simply again we target the 15 minute major low that we're already targeting. And you'll see when I play through, within 3 candles, again, straight down and smash through our full TP. Now, this is an example where I closed my trade too early, but many of other times I would get hit for break even there. And that's just something I've learned and I've developed over screen time, where normally if price starts rejecting, you know, quite bullish, it's normally going to hit your break even and you're going to get a better re-entry. On to the third and final thing that you're going to need to start doing. Now, the third and final thing that I started doing, and I recommend to the majority of people, is looking at the macro time frame. Okay. Now, if you don't know what a macro time frame is, it's 10 minutes before and 10 minutes after every hour. It's the pre-market macro. This is the middle of the market macro. So this is the major macro, and this is the end of session macro. This is the AM session New York time. So you'll see during the middle of the macro, the session macro, sorry, we got a big dump and a big sell-off. We can kind of expect something to happen similar during the end of session macro, whether it be big bullish momentum up to take out the highs, or another big sell-off to take out the lows. So this is now where we enter the macro. The next candle is the macro candle. Of course, we have just swept buy-side liquidity. So this is now where you can kind of expect either a volatile move higher, which shows you that, you know, we're going to continue going up, we're going to continue taking buy-side, we're going to take this level as well, you know, and we're going to smash through these highs. Or if we flip bearish and we get a big displacement down, you know, that is kind of signaling that during this macro, we are going to dump. And that's exactly what happens. Look at the first candle. First candle is the one that actually gives us the entry, which is genuinely perfect. Absolutely perfect. So we've just entered the end of session macro, we've displaced down, and then we've gone through the only clear and obvious gap in the leg. So again, another perfect position to short. Of course, we've just seen the trade, we know it plays out. But this is the importance of using macros. So if you are struggling to find entries, and you know, if you're struggling to, you know, catch the big moves, or every time you enter a trade it seems to consolidate, then I would highly advise entering during a macro time frame. Because 9 times out of 10, during one of these time frames, price moves in one direction and it just goes, okay? And if you can get an entry just beforehand or during the macro, then you've got a lot higher probability of winning. And, you know, I teach this to my students, I teach to everybody that I teach, that macros are your best friend in the market. If you're struggling, you know, when you keep getting caught in consolidation like this, every single time you enter, then simply just wait for a macro time frame. So, firstly, context behind the trade. Does it make sense for this trade to win? Okay. Does it make sense for the market to reverse, or does it make sense to target that liquidity? Or is there another major low that you're missing to the left that you haven't actually seen? Secondly, managing your trade. Once you're in the trade, manage it, okay? Once you're in, no one else can manage that trade except you. You just got to understand, is the market going to hit me break even? Is it telling me it's going to hit my break even? Or is the momentum good enough? Are we in a macro to continue down and hit my full TP? And that's something you're going to have to understand and learn, over forward testing, trading live. And then thirdly, of course, try and enter during a macro time frame. If a good setup presents itself to you and we're just about to enter a macro, then there's a lot higher probability it's going to win. A lot higher. So yeah, that's essentially it for today's video. Of course, make sure you join my free Discord in the description and also use the code CAFX at Apex Trader Funding. 80% off any evaluation. Also, don't forget to go through all the free education inside my Discord, the ranking guide, the blueprint, and also my YouTube as well, because there's a lot of free education on here. So yeah, thanks for watching. Please like, subscribe to my channel, and I'll catch you on the next one.